recording. So really what this is about is delving into some of the more advanced topics when it comes to Profit First. And also as part of that is really dealing with the challenges, the kind of the barriers and the obstacles that people have when they implement Profit First into their business. So if anybody's watching this for the first time, I'm Stephen Edwards and I run CTA, a firm of accountants, and we're Profit First certified accountants, which means we can help our clients kind of increase their profit and their cash in a proven way. We also help people with tax planning. And we help with their whole sort of outsourced finance function, including bookkeeping and payroll as well. So the Profit First Club, it's available to our existing clients and prospects. And we've actually got a new team member, Sophia, joining us today, who's come along. But it's a monthly webinar training session, and we save these resources on a platform called Notion. If you haven't got access, you haven't got those links, please email myself or someone in the team and we can share that with you. If you go back to the previous few months, you will get some of the more basics around Profit First. I'm going to assume there's a little bit of prior knowledge with Profit First, but just as a recap into the basics of Profit First, we've got other people joining here. Also got Alex joining. Hi, Alex. Can you hear and see me? Hi, Alex. Can you hear and see me?
I can indeed. Thank you. Sorry, I'm a few minutes late.
That's okay. No, I mean, I announced this one quite late, to be honest, and most of the time we do it for the recording rather than the kind of live participation because we're building a content vote of resources for people to access. So I was just saying this particular session, I'm going to delve into some of the more advanced topics of Profit First. So what we're gonna, and when I say advanced topics, I'm really focusing on the kind of the challenges and the barriers and the obstacles that people have trying to implement Profit First. So this is quite a practical session in terms of my real life experience and examples of what stops people getting progress when it comes to Profit First. I just reminded people for the video that the Profit First Club, it's a link on Notion. If you haven't got access to it, it's where we save all of the previous videos and there's some nice resources. But you can just email me if you haven't got access to that. And just for the sake of anybody watching the recording, I was just going to talk about what Profit First is. I've actually got Sophia who's joining our team next week. So it's a nice little recap for you, Sophia. So what I will say is the best place to start is the videos that we shared in August and September. For anybody, you can get that from YouTube. You can get it from our Notion page. But really, Profit First is a different way to run the finances in your business. Rather than putting all of your money into one bank account, you create what we call a pot system. So you might have multiple bank accounts, typically around 5. You're going to have an income account. You're going to have a profit account. You're going to have a tax account, owner's pay account, and an operating expenses account. So they're the 5 main accounts. If you're VAT registered, that will be a 6th one we'd recommend you have. And the idea is if you log into your bank and you see, I don't know, I'll make up a number. Let's pretend you've got £20,000 in your bank account. And that might be more than enough to run your business. But actually, if we split that money out, it might be that £5,000 is your VAT bill, £10,000 is your corporation tax bill, and then you might only really have £5,000 to run your business. So Profit First just helps tap into human behavior in terms of, the more we think is available, the more we tend to consume I use the example of a buffet restaurant. Most people eat more food when they go to an all-you-can-eat restaurant. Most people eat more food at Christmas when there's more turkey and everything. But yeah, you can go back to the previous videos to explain that. So who's this video for? So it's for anybody who's a Profit First client of ours. If you're watching this recording, it's a nice refresher or preparation if you're just starting that journey. If you're not a client, you'll still find it useful. So you'll have insights you can take away and you can use yourself. Okay, so I'm just going to do a little bit of a recap with some of the things I've talked about previously. So I don't want to just dive in and kind of lose people at the first hurdle. So when you implement Profit First yourself, the starting place, this is pretty much the stages of what you need to do. So the starting place is to do a profit assessment. So a profit assessment looks something like this. So if you look on the left-hand side, we've got at the top line, we've got total revenue. We've then got materials of subcontractors' costs, and then we've got what we call real revenue. So real revenue is a little bit like gross profit, that there can be some distinctions to make. One of the distinctions is if you've got a subcontractor that you're paying on a regular basis, we would treat them as an overhead. We wouldn't actually treat them as a kind of cost to sale when it comes to Profit First, because anything that's this regular part of running your business in terms of salaries and subcontractors will never come off the real revenue. It's always part of your operating expenses at the bottom. So in this example, to get this these numbers, what you need to do is you need to look at your accounts. So if you're on Xero, if you're on QuickBooks, or if you've got a set of accounts from your accountant, then you would go and look at those accounts. I prefer people to look at the bookkeeping system. So it's generally better to look at Xero or QuickBooks, because what you can do is you can go to your profit and loss and you can change the report to show me what's happened on a cash basis. So when you look at accounts, you know, you could be owed £50,000 from a customer that never pays you, and that would still show up in your profit and loss. But if it's a cash basis, we're only going to look at the money you physically received in that year. So when it comes to Profit First, we care about real money. We care about cash. If you don't know how to do that, or your bookkeeping system's not up to date, then your set of accounts is not a bad option. It's better than nothing. We're not looking for perfection when we start. We're just looking for an idea of it's a bit like getting on the scales, really. You know, we want to know how much weight we need to lose. So in this example, for this business, their real revenue is 293. They didn't keep any money aside in a separate pot of money for profit. So when we looked at their bank accounts, there wasn't really anything set aside for a rainy day. So that's why we put 0% for profit. We looked at what they paid themselves over the course of that 12-month period, and they paid themselves £43,000, just over, which is 15% of the real revenue. So that's their owner's pay. They didn't have any money set aside for tax. You know, some people are living hand to mouth when it comes to running a business, which is, you know, it does draw some people into Profit First. I would say there's two main business owners that are interested in Profit First. There's people that are really struggling. And I think at the moment, you know, there's quite a few people that have had challenges, particularly with COVID and the economy. And they need some major changes in their business, and Profit First is a great way to kind of make things easier. And there's also people that are surviving, but they want to optimize their numbers. They feel they should be paying themselves more. But to be honest, 85% operating expenses is quite typical when I work with people. You know, I see a lot of people. Yeah, 85% of the pie is going out to the expenses, and 15% is owner's pay. But what you need to do is assess your own business, look at your numbers to understand where you're starting from. As I said, it's kind of getting on the scales. We need to know how much weight we need to lose. On the right-hand side, we've got the target we want to aim for. So in this example, we're spending 85% on our operating expenses at the bottom, which is 249,640. We think this particular business should be aiming for 60%. So that's 175,816. So there's nearly £74,000 left on the table. So this is kind of how we approach a profit assessment at the beginning. So it's just a little bit of a recap for that. Hi, Dan. Hi, guys. Hi, David. Thanks for joining. Okay, so just a little bit of a recap for you guys. I'm just brushing over some of the things you need to do in Profit First, and then what I want to start talking about. I don't want to drag this session on for an hour for the sake of it, to be honest. I'm trying to keep it a bit shorter and sweeter, but I want to talk about some of the challenges that people have when it comes to Profit First. And because you guys are implementing Profit First, if you've got any questions or any feedback, that'd be great, actually, when we get to that stage. So just talking about the gap. So this particular business wants to go from 85 to 60% operating expenses. This is just a visual representation of the pie and what we're trying to do with that particular business. And then what you do is you need to create a roadmap to say, what am I doing each quarter? So I might be starting at, on this particular sheet, 75, I think it was meant to be 85%. So I'm starting at 85%, and then Q1, if you look at the bottom, I want to go down to 81. I want to go down to 77. So we're looking for that consistent kind of weight loss in terms of, becoming more efficient and leaner in your business. And this is how we approach it systematically. And we're not looking for major changes normally for businesses unless their model is broken. And I have seen one particular business I work with where they had £1 million worth of revenue, and their real revenue, which is a bit like their gross profit, was only £80,000, and their profit was only £12,000. And I just basically told them that Profit First is not your problem. Your business structure and your model is your problem. So there are some people where Profit First will highlight major issues in your business. And we'll touch upon this in a minute. Some people don't want to get started with Profit First because I think they're scared that something's not working. And I encourage those people to get started sooner rather than later, because we want to know where we are. We want to get on the scales. We don't want to put off really measuring where we're at in financially in our business. If you're wondering where these benchmarks come from, these are the numbers that the Profit First HQ use. I wouldn't get too obsessed with the exact percentages, ignore the fact it's in dollars, but absolutely it's possible to be achieving these percentages, because we're not, with Profit First, it's not just about cutting expenses, it's about innovating, it's about being a leader in your business. We're putting all these things together to think differently, and we're not aiming to be average. I wouldn't target these numbers straight away, but they are on the roadmap sort of longer term, really. I would normally have if you're at 80% operating expenses, we'd probably be aiming for 60% in the first couple of years, something along those lines. But longer term, there's no reason not to limit ourselves. It's not really what this session's about, but just a reminder, just to complete talking about Profit First. You really going to have, I recommend 3 levels of banking. So normally your main bank is going to be where you're going to have, I would personally recommend having an income account and your operating expenses in your main bank that you use. For me, that's Santander, but that could be whoever you bank with. It's easier to set your pots up in something like Starling or Monzo, Tide Banking, one of these kind of fintech banks. It's just easier to create your pots. And then later down the line, you probably want a 3rd tier bank, just to kind of put your profit and your tax completely out of sight, out of mind, so you don't see it. I wouldn't worry about that straight away if somebody's implementing Profit First, but it does work because you kind of forget your tax money is there. And the idea behind that is, in this example, you quickly put your money into Starling every week or every 2 weeks for your tax. But if you leave it there, it means you need to look at it every week or every 2 weeks, and you know it's there. So we kind of want to tuck it away, but we put it in that middle bank just convenience initially. This is an example how somebody might do their allocations. You'd put the month and the week or 2 week period. You'd have an income column. If you're VAT registered, we would normally figure out roughly how much you should put aside for your VAT. We all know that VAT is 20%, but actually, you're going to have expenses to claim back as well. So as a proportion of what hits your bank, it's going to be a little bit lower than 20% because we've got something we can claim as well, to reduce that VAT bill. So for us as accountants, it's about 14.5%. These are not my numbers, but it is 14.5%. For you, it might be 10%. It depends on your own numbers. Yeah, so a spreadsheet would work out your allocations for you. The other thing is to make sure you review your expenses. I'd recommend reviewing your expenses every 3 months. It's one of those things, I learned from Brendan Burchard a phrase, and common sense is not common practice. So, including myself, we can look at this and say, oh yeah, I need to review my expenses. But anyone watching this, live or the recording, I would challenge you, when was the last time you went through your P&L line by line? And that's a good exercise to do every 3 months. And everything needs to fight for its existence on your P&L. And really, you've got must have expenses or essential expenses. You've got nice to have expenses. And the other category is probably something that's an investment. It's not a must have, it's not a nice to have, but it's an investment. You might be a training course, for example, with Tony Robbins or someone else. Okay, so this is really what I wanted to talk about. So everything else is just kind of bringing people up to speed, but you can go back to watch the previous videos, which talks about that in a bit more detail. So I wanted to talk about, I call it the advanced topics, but really what I'm talking about is what stops people from having success with Profit First. The first thing I want to touch upon is really starting with the wrong percentage. So if we go back to these percentages here, if you start straight away, and I have seen people do this, if you start straight away with 30% operating expenses, if you're less than 250k revenue, and you're currently 80%, that's probably impossible. That's a big ask. And I've got a picture of Joe Wicks. I said to my colleague, everybody likes a bit of Joe Wicks. So, I've got him on the slide. But the reason I share Joe Wicks, because over COVID, some of you might have done some home YouTube workouts and that sort of thing. It's very difficult to keep at the same pace with someone who's an expert or someone who's really fit and in shape and they're a specialist. So what you need to do is find your own pace. And that's what we need to do with Profit First, is figure out what pace suits you. And normally the pace that suits you is to figure out what you're doing at the moment. If your operating expenses are currently 85%, you can probably get away with about 82 or 80 initially. But don't try and do anything drastic. Even if you stick to 85%, just stick to the same expenses, but get used to managing your cash in the style of Profit First. Just get used to putting it into pots. So we're talking stepping stones at your own pace. The people that dive straight in, they normally fail, if I'm honest. It's a bit like a diet. It's a bit like going on a crash diet and doing too much too soon. So, and if you've been having any blockages with Profit First, and there's nothing wrong with rewinding. It's a bit like some going to the gym, going for 4 weeks or 2 months. They get off the treadmill and they don't go for another 2 months. When you get back into things, just start with what makes sense to you. And I say that half the battle of going to the gym is just going to the gym. It's not actually what workout you're doing. It's just physically getting to the gym. So if somebody's not doing their allocations, just start that habit and do it in a way that works for you. Don't worry about, making it perfect. And any sort of early questions from what I've been talking about, or anything people want me to cover later on?
I think for me, like, I have been doing the allocations and, I understand sort of doing it incrementally. I'm still having the challenge of seasonality. There wasn't enough built up in the summer now to me to sustain those percentages going forward for what I need in my operational account, not being able to take payment for myself, that sort of thing. So that I think is part of me, needing to take some of that seasonality out of my business and about my business strategy. but it becomes a bit of a challenge because it's like I can't follow these allocations anymore. You know, I could follow it through the summer up till now. Now it's pretty dead. And you know, I tried to budget for it based on last year's figures, but this year, you know, is worse than last year for us and you know a lot of my competitors, I think. So yeah, just finding that a bit of a challenge now.
That's really helpful, Dan, actually. Seasonality can be a big challenge for people. I'd say in an ideal world, and I know we've had this conversation in the past, and you know, we don't all live in an ideal world, but ideally, you know, we would start in the feast part of the season, and we've got enough money to put aside for the famine part, you know, the peaks and troughs. But actually, that's not always the case because there might be a VAT bill, a corporation tax bill, or whatever it is due, you know, and something that needs paying in the past. So I think my advice there would be, firstly, it needs to work for you. I always say to people, don't follow profit first 100% because it's just a generic, well, it's not generic, it's proven it does work, but not the same thing's not going to work for everybody. I would follow it typically 80%, and then I would freestyle with the 20% that suits you and don't feel guilty by that. So if you can take a little bit of the profit first way of thinking into your business in the leaner times, you know, tweak the percentages so you know those percentages work. What I would say is do what you're already doing, but just edge a little bit closer to profit first. You know, Mike says in his talks, he says for people just starting, even if it's 1% in a profit account, if that's their way of, you know, using profit first right now, that's better than nothing. So just figure out what's natural, I would say, for where you are.
Yeah, it has helped. Yeah, it's not all been a loss or anything. Like it definitely has helped, and you know, I've been able to pay my tax bills and my VAT bills without having to scrape around and find money because that money's been going in. You know, and I haven't touched that. But it's just yeah, when it's come to sort of paying myself and then also make sure I've got enough money to pay my team and that sort of thing. Yeah, this time of year those percentages haven't worked, and I think like in summer as well, you're sort of yeah, though yes, more money is going into those pots, but what can be difficult for me at the moment is then going, well, actually, is some of this a surplus? Can I buy a new computer? Can I recruit somebody, or actually, do I need to be keeping hold of this to get me through the winter? And it's quite hard to sort of work out, you know, when I have got the additional, you know, resource to do that, or if I haven't.
Yeah, and what I will say is even people that are, you know, progressively improving their percentages in the direction they want to, it still feels difficult. I have a lot of conversations with people where they're making more money than they've ever made, but they don't feel like it. They're like, I feel pinched for cash. And, you know, it feels the same in our business. So I think the system is rigged to make us feel pinched all the time. I think there's an element of that. But what's going on in your business definitely plays a part. I've been working with someone recently and we decided to freeze their percentages. You know, we're meant to be tweaking it in the right direction every quarter, but the sensible decision for them in their business was to freeze it. And sometimes that means to go backwards to be able to go forwards. It's just making it work for you, really. It's just slowly but surely heading in the right direction. So from personal experience, you know, there's people I work with where they, I don't know if scared's the right word, but they don't really start profit first properly at the beginning. That, you know, they kind of sign up to work with us and they say, I'm ready next quarter, or I'm not ready this month because I've got these bills and I've got these things going on. And this is one of the challenges I see. I'm going to talk about some of the solutions around this in a second, but I do hear that people are often waiting for perfect time to start profit first. It's one of the struggles I see. And again, it's a bit like the gym. It's a bit like waiting until January to get in shape, really, I would compare that to. Ironically, I don't have enough money to start, which is, you know, quite a funny one, really, because we're trying to save money in the first place. And that's what that means is the timing's not right, or I've got bills to pay and I can't afford to do my allocations. I think that's really what that kind of means. yeah, I won't dive into the answers now. I'm going to save them for in a second, but that's a typical barrier I find with people. Also, people like what they're doing, so they're fighting themselves. We're all creatures of habit, so they like the idea of profit first, but they're used to managing your cash as a business owner is very personal. You know, paying your wages, logging into your bank is a very personal thing, and people don't really like change. There's this resistance to change, so there's a bit of a mindset barrier with actually changing to do a different system, and I think that's why the small steps definitely works. And you don't have time. I see some people, they haven't got time to do the allocations. So these, for me, are the main reasons I see people not really making progress with profit first. I guess the other thing I would add is I went back to this, I mentioned this at the beginning, but if your model is not making enough money in the first place. So I work with somebody who sells things on Amazon, and her margins were so small that I spent all the time in our first session analyzing her margins. There was no point me looking at profit first because the margins were too small. Sometimes, it's not profit first and managing the cash. Sometimes your model needs to have enough profitability to actually work in the first place. So sometimes that can also be a challenge. I don't know if anyone's familiar with this concept. It's called Orbed. Has anyone heard of that before? Orbed? No? Okay. So you'll probably see it everywhere now. It's also referred to as above the line thinking. You can see there's the green content at the top and there's the red below the line. Orbed is just the acronym for OAR. So if you're living above the line, the traits that you are demonstrating are ownership, accountability, and responsibility. So it's about what can I do? What am I doing? Am I doing everything I can possibly do, in this situation? And this is great for team members, by the way. If you've got team members, absolute game changer when we've all probably had this when you listen to challenges from a team member and you hear blame, you hear excuses, and you hear denial. And that's what we refer to as below the line. And there's a couple ways of remembering this, which is quite handy. OAR is an oar. So, momentum in a boat, moving forward. Someone who's progressing, looking for solutions. BED is bed. You're not really getting out of bed. You're kind of living in this negative place. So the reason I share this is going back to these challenges, these blockages. A lot of them are mindset issues. A lot of them are kind of, are we living above the line or below the line there? And yeah, I can send a copy to this to people. It's one of our core values. Sorry, the dog's in the background drinking his water if you hear any background noise. It's one of our core values. And I even use it with my kids. So my daughter's been having, she's been a bit naughty at school recently, and I hear a lot of blame and excuses. And I'll be like, Jess, is that above the line or below the line? So it's a great mindset tool, really. And the reason I talk a lot about mindset is thinking becomes actions, and actions become outcomes and results. So it's very heavily it's heavily related to how we show up in business. One of the other barriers is lack of accountability. So if you've got nobody to hold you accountable with your allocations or doing your numbers with profit first, this is not unique to profit first. This is unique to your business in general, having a kind of boardroom or having an advisor, a mentor, whoever it is. But particularly with profit first, I find one of the most powerful things we offer people is just making sure we're holding them accountable. Did you do this? How are you getting on? And often we don't need to challenge people. We just need to be present to ask them the question and look at what's happened in the last 3 months or the last month. You don't have to work with a professional to get accountability. It can be, sometimes you can create a system potentially, or you can create an internal team member to hold you accountable, but it's whatever, you need some kind of accountability generally to help you progress. The other thing is, storms, roadblocks, challenges, unexpected bills. So it goes back to it's not the right time to start profit first, or I've got this nasty VAT bill or the surprise PAYE bill, whatever it is. what I will say is that's constantly going to happen in your business. It wasn't Earl Nightingale, but it was his partner who started a lot of the modern day South development. And I think this was around the 50s or 1950s. And they asked him about the problems he deals with as a business owner. And they said, "Oh, how come you still deal with all these problems? You know, your business is a lot more successful, it's bigger, you've got this team." And he said, as a business owner, we're always going to have problems. We just earn the right to deal with bigger problems. So, you know, as we get more successful, as we get bigger, we're just having bigger problems. Or hopefully we're having bigger problems. So there will always be kind of storms really in your business. And that's one of the challenges with Profit First, is it goes back to the timing's not right. But I just think that's always going to be the case. You know, you're always going to have these obstacles, really. So here's some of my tips. You know, happy to have a Q&A in terms of dealing with some of these things. So the first one is understand where you are starting from. So I'm specifically referring to the percentages. So if you're trying to aim for 50, 60% operating expenses, you need to be clear where you're starting from. And some people haven't got the financial data to know what their current percentages are. So you need to invest that. It's a bit like, you know, the same with a carpenter, measure twice, cut once. You know, with Profit First, measure twice is really take the time to understand what are my current numbers from a cash perspective, what am I up? And the important thing to note with Profit First in terms of your operating expenses is your accounts will only tell you half the story. We want to know everything that's going out your business bank account. So if you've got a loan, if somebody's got a bounce back loan and it's costing them 900 quid a month, that won't show up in your accounts. It won't show up in your P&L because it's not a tax allowable expense. So you won't even see it. But actually in cash terms, that's coming out your bank every month. And that's something we need to allow for. So just get a clear picture on what your current percentage is. If anyone's struggling with that, you know, reach out to me and I can point you in the right direction with where to start. My other tip is just get started. Again, you know, going back to what percentage should I have, or the timing's not right. Even if you're doing that 1% profit, or you're putting a little bit aside for tax, even if you don't feel, even if you haven't got 5 bank accounts or 6 bank accounts, if it's 2 bank accounts, it's better than nothing. Just get started. And this applies for any people that have been doing Profit First for a long time and they've stopped and they've hit a barrier. It's just get started again. You know, just get back on the treadmill, really, I would say. The other thing is, so I could probably relate this a little bit down to your seasonality, I think. You know, it's challenging with the percentages when it's seasonal. So what I would say in that instance is do what you're already doing, but a little bit more like Profit First. So we have to survive as we are. So you're obviously managing by paying your bills and doing what you need to do. So do what you're already doing, but ask, rather than try and, like, you know, transform everything and do it exactly like Profit First, you know, if it's not working for you at the moment, I would just say, how can I make this a little bit more like Profit First? So do what you're doing, but just tweak it with, how can I make it a tiny bit more like Profit First? The other thing, and again, this is not unique to Profit First, is get help. You know, Bob Proctor, I know, David, you're familiar with Bob Proctor. You know, he's pretty much pre-Tony Robbins type, you know, inspirational speaker. And he's a big fan in the philosophy of Think and Grow Rich and law of attraction. And he shared a story that it was a BFO moment, a blinding flash of obvious moment for me. I mean, I do pay for help. I'm in different mastermind groups, have mentors. I'm a big believer in asking people for help. But this really resonated with me, that there was a guy in a corporate business, hundreds and hundreds of employees, and he was winning every single year. He was winning the Salesperson of the Year awards, absolutely smashing it, making more money than anybody else, doing all the right stuff. Bob Proctor went to lunch with him and said, how many people have asked to go out for coffee with you and ask for some advice? And he said, no one. When you think about that for a moment, you know, you've got someone who's in point A and you've got someone in point B. Point B is the desired outcome. That's where we want to be. So you've got, let's say you've got 999 people that are point A. They all want to get to point B. Only one person's achieved point B, and the 999 don't want to ask for that advice. And it just resonated with me. You know, if you want to get in better shape, you get a PT. So getting some kind of help with Profit First will certainly help, but it's not unique to Profit First. This is unique to business in general, in life, in my opinion. The other one is expect the challenges. So if we go back to the storm, if you expect the challenges, you know, there's a book, Mark Ronson, The Subtle Art of Not Giving a Beep. And basically he says that life is full of obstacles and challenges. So if you have the mindset, I'm always going to have a challenge in my business, and just look for the gifts. Because often there will be a gift in a situation. So, you know, if you've got something that's a surprise in your business, there's normally an upside. And look, it is a mindset shift, but there is normally an upside in that situation. And you might be thinking, is that relevant for Profit First? But sometimes I've had obstacles in my own Profit First numbers, and that it's forced me to look through my business with a different lens. And I've kind of looked at this and thought, do you know what? I'll give you an example. I need to hire a certain team member. I needed to hire quite a senior person in my business. And I looked at the numbers, and Profit First said, you can't afford this person right now. And that's a bitter pill to swallow sometimes, because we all want to be on the upward trend. We want to be growing our businesses. We want to move to the next step. But I took a step back, and I've done some thinking time. Classic Keith Cunningham style, Alex. Done some thinking time, got my pen and paper. Wow, and David's just done a Tony Robbins workshop. You spent 12 hours with Keith Cunningham, haven't you, recently? So
yes. Can you tell?
Yeah, I can, yeah. So yeah, Keith Cunningham, Daniel, he's got a book called The Road Less Stupid. He does a lot of stuff with Tony Robbins. He's a big believer in thinking time, and basically asking questions of yourself, blocking some time. So when I had this challenge with Profit First, I couldn't afford to hire the team member. I took 45 minutes in a coffee shop, pen and paper. I use a Remarkable, it's a digital version. And I wrote down everything I could think about. How can I resolve this situation? Or how can I be creative? And I changed my business structure from that thinking time session. And it ended up saving me, I reckon, about 25 grand in salaries. And we survived. We managed. We got through it. So kind of look at what, you know, look for the upside in a challenge, because often it is there. And create accountability systems. You know, even if you block time in your own diary, and this is quite difficult for business owners to stick to this, because there's normally buyers that need putting out or shining new objects. But if you haven't got anybody you work with, put an hour a month in your diary, or an hour a quarter, and say, review my Profit First numbers, and just do that every 3 months. That is a kind of accountability. It's not as good as working with someone, but it's better than nothing. And the other thing I would say with Profit First, which I've just touched upon, is asking better questions, really, which is really key. And I wouldn't say it winds me up, if it's frustrating when people think that Profit First is just cutting expenses. So a lot of accountants that are not familiar with Profit First, they kind of simplify it, and they say, surely it's just cutting expenses, you know, because how else can you make up all this extra money? But actually, the big driver behind Profit First, one is the habits you build, the consistency, the practices, the kind of out of sight, out of mind way of thinking. But the other one, which I just touched upon with the thinking time, is asking better questions. So Profit First will absolutely help you ask better questions in your business. And I've just put some examples here that help people think more strategically or more resourcefully, come up with ideas. So if you can't afford something, ask, why is this the case? Nigel Botterill from the Entrepreneur Circle, very successful entrepreneur, runs a big network of entrepreneurs. I've mentioned them to Dan recently, really good for marketing resources. He hates the phrase, I cannot afford that. He says he never wants to say that in his life. And that might not resonate with all of us. But the interesting mindset with that is asking the question, why can't I afford it? Or how can I afford this? And that's pretty much a rich dad, poor dad mentality. How can I double my revenue without increasing my costs? Again, it might be impossible, but if you don't ask the question, it will be impossible. So it's just planting those seeds. You know, your mind cannot ignore a question. If you ask a question, your subconscious will start thinking about this. You know, it might come back to you later on. You might get an idea in 4 weeks' time or 4 months' time when you're in the shower or something. How can I earn the same revenue with half the effort? You know, the way some people do that is focus on what their best-selling products are or services, or they get rid of wrong fit customers, wrong fit services. So McDonald's, for example, in the 50s, when they started, they had a really big menu. They had a bloated menu. They've got a big menu now because they've got the systems to manage it. But at the time, 77% of their sales, around 77% of their sales, was from burgers, fries, and milkshakes. So McDonald's scrapped everything else. So what I say to people is, what's your burgers, fries, and milkshakes in your business? Because and the example I've come up with is if I went into McDonald's now, not all revenue is equal. If I went into McDonald's now and I said, can you make me a spaghetti bolognese? I'm sure somebody knows how to do that. I'm sure someone in McDonald's on the till or in the canteen could go and make me spaghetti bolognese. But can you imagine the disruption that makes and how inefficient it is for McDonald's to do that? I think all of us, to some extent, have probably got spaghetti bologneses in our business that they don't fit our ideal blueprint and that it's harder to earn that revenue. So asking that question is quite powerful. How can I offer more value to my customers without significantly increasing my efforts? So I call that leveraged value. How can you get value that's not just an exchange for time? How can you offer something that's so valuable to your customers that actually it doesn't take that much resources? I think most people have got some way of adding a little bit more value without necessarily increasing the efforts that go into doing so. And I touched upon this in my personal example. How can we manage without that new team member? I mean, it's a balancing act, and is trying to grow while doing profit first. So it's not saying you shouldn't invest. It's not saying you shouldn't hire new team members, but it's understanding when is the right time to do it and what is the right person. And I would always think strategically first. You know, how can we be more efficient or more productive with systems, automation, AI, or whatever it is, before we go and hire that new team member? So it's asking these sort of questions in your business. I said it'd be less than an hour, guys. I know I've been talking for nearly 45 minutes. Is there any questions on any of this? Anything I can help with?
No.
No? Okay.
I think so. It all makes sense.
Okay, perfect. I'm more than happy if anyone has any questions afterwards, just pop me an email. More than happy to answer that. Yeah, I think you all know about CTA, so I won't really do all the talk. But just as a recap for anyone else watching, we also do the finance functions. We do bookkeeping, payroll. We do proactive tax planning. So we don't just do the profit first side of coaching. So there is something I am looking to introduce in Q1 of this year. So I'm looking to introduce a profit first mastermind. So I won't go into too much detail, but if anybody is interested to learn more, just pop me an email and we can talk about how that would work, what that looks like. But the idea is getting a curated list of business owners in a similar boat, all trying to implement profit first. And we meet once a month, and I facilitate that. It's focused on profit first and getting success in profit first, but it taps into wider areas in your business. It's not going to be a huge investment in your time and money, so we're looking to make that quite a valuable offering. But yeah, pop me an email because we're just drumming up a little bit of interest in that, because it will be quite a small knit thing I'm looking to do, probably no more than 6 people to be honest. That's it. If no one's got any other questions, I think I'll cut it off there then. Yeah, okay.
Stephen.
Yeah.
Cheers. Thanks, Steve.
Yeah, thanks guys.
Bye.
Cheers.
Thank
See
you
ya.
so much.
Thank you.
Thank you.